Greatness is being so aware of the time of life in the second that went by, and you can recall like it was yesterday. Greatness is being able to go back there, not making that same mistake again, and being haunted by it.
There really are only two macro level motivators that we have in life, and that's pleasure and pain. I want people to understand is, okay, so if nature only gave you two things to motivate you, pleasure and pain, why would you eliminate half of them? And so most people think that life is about avoiding the pain. I'm here to tell you right now, in a very controlled fashion, it is about really experiencing the pain, learning from it. Pain.
Amazing day, guys. Let's get started. I hope you guys had a great weekend. It didn't come home. It didn't come home. Hopefully you still had an amazing weekend. Was able to enjoy a little bit of weather, but it did not come home. All right. England doing what they do best. The point. All right. So today, what we're going to be going over is we are going to be running through the restrictions that I want you guys to add to your trading. It's restrictive behavior in regards to time-based trading, being able to restrict the amount of time that you're taking trades, being able to only be able to look within 2 sessions, all right, which is the Open of London session and obviously the Open of New York, all right, and be able to see them and understand and see what the opportunity is, okay, see what the opportunity is. So let's have a look at these markets and see what it is that we can look for in these opportunities. Okay. Now, let me show you in a nutshell. I'm going to give you guys some source real quickly. Yeah. In a nutshell, in the start of the sessions, okay, there's a little bit of a playbook. You can add this one to your playbook. At the start of the session, you can drop down to a very small time frame, and right exactly when a session starts, we're looking for that imbalance. Yeah. We're looking for that fair value gap or that imbalance that has formed to allow you to be able to take a trade. Let me show you, let me give you an example, all right? Just this morning, I unfortunately was in the gym, but I was watching it, okay? So let's imagine this is the start. Look, London's opening here at 7 a.m. And you've seen the market do this. I'm on a small time frame, yeah? You looking? Pay attention to this one. You can see that the market was having some sort of consolidation or some sort of build up beforehand. Okay, whoops, some sort of build up beforehand. Okay, like this. Now, bearing in mind, Asian session normally allows us to frame a potential move. All right, so have a look at Asia session. Asia session was in here. When we see things break outside of Asian session, it's not a 100%, like nothing is 100%, but normally that's the market taking liquidity from above this Asian session. And then normally we see a push in the opposite direction. With that in mind, okay, with that in mind, have a look. What we look for is before the sessions open. So this was London session going to open at 7 o'clock. And we see how this market had this little build up and then pushed up, yeah, pushed up, grabbing liquidity from this little build up here. And then we see an imbalance form. This imbalance becomes one of our playbooks. When we see an imbalance form like this, leading up to the open of the market, it's very, very probable the market is going to tap into that imbalance. Have a look at your trade, all right? Have a look at the trade, tap into that imbalance. You stop above this level here, okay? And then where is it going to go? It's going to go down to the nearest structure. Have a look at the nearest structure. It's obviously going to be this low. All right, the market goes from in this area here, tapping into that imbalance to the nearest low. Remember what I said to you when you're placing your stops near lows, you always place them before the low. All right, this is in regards to how you ensure your profits. Have a look at this. With that trade there, which is very, very quickly a 1 to 6 trade, all right, is based upon before we see markets open, we look for the imbalance. We have a narrative understanding that Asia session, any push above Asia session, we start seeing structure being broken, could be a liquidity grab, okay? We see this push. We see this push here, okay? this push here, which breaks some minor structure. Have a look at it in a 1 minute time frame. It's easier for you guys to see it. Because what needs to happen, have a look, is this push. This is before London Open. And let me put a yellow line so you know where London Open. And I want you to pay attention to this because we're going to back test it in a minute and see how many other times it happens and see whether or not we can continue to take advantage of it. Because I know a lot of people know the strategy, but they don't know necessarily when to trade, when to get in the market. So I'm giving you some more restrictions. London session, New York session, and looking for the setup prior to those sessions and then getting out of the markets. So for example, this was Asian high over here. I'm going to make it a red line so you know where it is. Okay, have a look. This was Asia high. Okay, now we saw this market push up outside of Asian high. This is a 1 minute time frame. Now, when it pushed up in here and we saw this push over here, this push is breaking minor structure. I'm showing it to you on a 1 minute time frame because you can understand and see it on a 1 minute time frame. Okay, so if I do a line here, solid line, we can see that this was structure, this wick here. Now the push where we see a big candle, because that's what we're looking for. We're looking for an imbalance to form. That wherever the candle that breaks structure typically is where the market is going, the imbalance the market is going to. Typically, let me say that one more time. Where that market breaks structure in its push and makes an imbalance, so this is strength and speed, that has to be the one that breaks the structure. The one that breaks the structure is typically where the market is going back to. So we must see that push before the London opens, breaking some structure. And this push definitely does that, breaks some structure, breaks some structure. Then what we're doing is we're waiting for the market to come back to that imbalance. Now, for the people that are in the morning going to work and things like that, you can actually take this trade as a limit order. I'm giving you a little playbook, all right? As a limit order, you can take that trade, okay? Because ultimately that trade is gonna push back into that imbalance and is gonna run. Now, obviously, if you was just looking at this on a smaller time frame, you could have just taken the indication correction continuation with your stop above and you'd be in the same position. Yeah, you'd have the same trade. This way you have a slightly better risk to reward by taking it when it comes back into that area, and it allows you to place a limit order. Okay, but if you're on a small time frame, for example, this 1 minute time frame, all right, is that you have to understand that your targets are also going to be realistic targets, which are going to be the bottom, which are going to be to the previous structure over here, this previous swing structure. Okay, now the market didn't burst through it, but the market ran for a 1 to 6. Yeah, at the point when this market becomes, a 1 to a 1 to 1, 1 to 3, you should be making this risk free anyway. Okay, so this could never be a losing trade. All right, and when it comes to, like I said to you, taking your profits, you should always be trying to place your stop a little bit before the end. Now, what does that mean, a little bit before the end? That just means ultimately you want to make sure that you're not sitting here and you're half a pip away from your stop and the market doesn't hit it, especially if you took a trade on a smaller time frame. This is a trade 1 to 6 before you've even poured milk on the cornflakes. All right, you have to know when you've won, and a 1 to 6 trade first thing in the morning is a very good trade. I'm going to explain this play again, and we're going to have a look again and see what happens, because this is a short-term move. 1 minute, you've been in and out of the markets in literally, what is that? 25 minutes, if that. Yeah, you've been in and out of the market. This is a play I'm trying to show you. The play is as markets open, all right? London and New York markets open, okay? Now, that might not be the bigger play of the day, or the market might be going to somewhere else, etc. But I'm talking about a play for you to get in and out of the markets, take your money and go, all right? Now, have a look. This Asian session was here. We saw the market spike above the Asian session, yeah, over here. But to be fair, yeah, spike above this Asian session. And then we've seen London have that initial little move down here, and now we're all up into this space. Now let's go back to our standard market structure and price action and understand where we are. Well, we are in a premium. We're in a premium of a premium, in my opinion. Let me hide some of these lines. Let's hide some of these lines. Are these not alerts? Oh, they're not alerts. Okay, sorry. Oh, these are some, I think these are structural lines I've placed in here. Let me fade them out. Yeah, they are. Okay, sorry about that. Let's get rid of that. Let's get rid of that. And get rid of you as well. Yes. Let's get rid of you. Because the market's broken you already. And these are some other little structural lines with some imbalances, which I'm going to fade out. They're a bit too bright, taking up a bit too much space. I really am trying to get better with my drawing to make sure everything's not a hot mess. Fade them all out like that. Fade this one out also. All right. What are these lines? Just get rid of them for now. Just get rid of them for now. Get rid. This is London open, I believe. I don't know what this line is for either. Let's get rid of that one. All right, so we're already in a premium, in my opinion. Look, we're in a premium of this yellow range, and we're coming up into a premium of this orange range. Yeah, premium. All right. Let's drop down to our 4-hour time frame and see what's going on. Well, the 4-hour time frame pushed up into this premium, and then we started to see a reaction from there. All right, the reaction pushed down here. All right, created a gap and some imbalance, but obviously the gap, this were wicks there crossing over. Let's just drop down to an hour time frame, have a look. You can see how this market hopped down in here, all right, and then pushed down in here. So we had some consolidation in here, then the market did a little hop. Maybe this market is pushing up into these levels. It'll be interesting to see what happens when it gets into these little areas here and see if the market's going to have a reaction. Okay, let's drop down to our 15-minute time frame and have a look and see what's going on. Well, on our 15-minute time frame, as per Owanda's candles, we're seeing this gap in the market in here. As per Owanda candles, okay. As per Owanda candles, we're seeing some little gap in here. All right, let me make a little red little zone in here, okay? And we've seen the market from Asian session, we had a little reaction first from the 1-minute time frame, but again, breaking out Asian session high, taking some more liquidity. Is this market going to turn around here, or is it going to continue bullish is the question. Let's drop our time frame down to a 5-minute and have a look. So that first play is about the start of the session, which we're going to go and back test in a minute. Yeah, we're going to go and back test it. I don't want to just say it, just on the basis it's a one-off just by today. Let's see, we'll go and have a look to see if it happens anytime historically. If there's any more times it happened, does it happen in a New York session? Because then that could be something that you look for as a play, all right, that you can use in your trading, all right? Let's get rid of that red line, all right? Well, that red line was Asian session, all right? And get rid of that. So we see this market, is there going to be something happening over here when this market taps into this level? I don't know, because at the moment, like I said, it is Monday. Monday can be a little bit funny for market structure because the week's playing catch up. I mean, in the weekend, we've had England lose. We've had man try to take a shot at man like Trump, dodging bullets like Neo. Yeah. Supposedly, all right, dodging bullets like Neo. I don't know. Everything just looks like theater to me. I'm not going to lie to you. Everything just looks like a B movie. Yeah. Sunset Beach or one of them next kind of B movies. I don't know. Someone was trying to shoot at him. He had his hand up. I don't know. That was, the human shield was around him, looking really, really nervous. Thinking to themselves they're going to have to earn their money now. I don't know. All right. So either way, we've seen this market here. Have a look at our strategy, okay, on the 5-minute time frame. On the 5-minute time frame with our indication correction continuation, we wouldn't be taking an L here because the market's indicated here, breaking some structure, correcting, but didn't continue. Our money's in our pocket. All right. On a smaller time frame, there was an opportunity as markets open, which was it tapping into this imbalance in here. As we saw on a 1-minute time frame, we saw this push here, breaking some smaller 1-minute structure, and the market coming and tapping into that and falling for a 1 to 6. This is a play. We're going to go and test out this play. But in regards to bigger market structure where the market's going and changing direction, our indication, look at the structure would have been here. This would have been an indication. This would have been a correction, did not continue and close down below. So on a bigger picture, our money would still be in our pocket. That's win-win for both of us, both of these plays and this understanding of the markets. Now we're watching this here and seeing what's going on, seeing what's going to happen when we get to that little point of interest of where the market kind of gapped as per Owanda candles. I really want to look at some other candles. Let me have a quick look at my broker's candles and see whether we had the same situation that happened there. Okay, because it could be something that's unique to Owanda and nobody else gives it that. Nobody else cares. Okay, let's see. I'm just having a quick check. Yeah, there is a gap also with my broker. There's a gap in the market exactly there also. All right, there's this gap around here. So it's going to be quite interesting to see what happens when the market goes up there. We can see the market trading within this little range right here, this little trend. If I go to my 1 minute time frame, you can see it making higher highs and higher lows and higher highs. And the market is, are we now going to look? We see these equal highs we're having here at the moment, having some equal highs, a little bit of build up of liquidity on a smaller time frame. Is the market then going to push up into this area here and start having some sort of reaction, or are we going to see this market push up in here and dance around for the whole day until London happens? Maybe, not impossible. This market doesn't decide it wants to just go sideways for the whole day, especially as I haven't had a look to see what is happening in the economic calendar. Yeah, apart from UK losing, England losing the euros. Yeah, apart from anything else, what other scheduled news events are happening for today? Well, we can see a lot of stuff happening in China, which I'm going to go look at the Japanese yen in a minute. All right, but we've got USD, New York Empire State Manufacturing Index a little bit later, and we've got some Fed Chair Powell speech, and we know his speech makes the markets get active. All right, so these are the things, the catalysts that could affect the markets. All right, but we are definitely watching. All right, let me go and have a quick look at, I'm going to put my alert, I've got an alert in here. Can you see there's an alert in here? I'll pop an alert below price if the market starts to do something else, which I think is going to push up before it pushes down. But those are my alerts looking in the market. All right, let's go and have a look at EJ for argument's sake and see Huaguan in EJ. All right, but we're going to get back to GU because I'm going to show you some other little things that we can do with GU that's going to help our trading. All right, it's going to assist us. Okay, so this is EU. Just having a quick glimpse at it. We're going to zoom out and hit the reset button, this one over here, see what's going on. Have a look at our lines. Yeah, look at our lines that we've scribbled onto this chart. Just scribble in some lines based upon the trend, based upon the range. And when we go back to our market, our EU, that we haven't looked at in some time, we can see how the market is respecting our little lines. As the market came up here, danced around, going sideways, pushed up outside of the range, grabbing some liquidity, and then whomp, yeah, broke structure bearishly, took out all of the liquidity, all of the buy side liquidity, took it all out with that one big push, bang, and then we proceeded to see the market making some sort of correction, but not breaking. Let me take out some of these lines previously drawn. Look at all of these TPs that were drawn that were smashed. See, all of these TPs that we drew in here, smashed. All of these blue lines were TPs, all right? And we've come all the way down to this structure point over here. You might as well say that's hit TP as well, with this break over here. But we've seen that this is relative lows that are not being broken. So that area there now becomes an area of interest. There's some liquidity sitting below here, all right? With all of those equal lows, okay? Now let's zoom in some more and see Wagwan, okay? We can see this market has made some lower lows, a lower high, okay? And the market's currently, in here doing the hokey cokey. Now we can see a huge concern above, which is this entire area here, which is going to be imbalanced. This is definitely a concern, all right? This is definitely a concern that the market may decide it wants to go and fix that inefficiency. If I was looking at this trade, I'd be very, very concerned about that, especially as if I connect the dots from here, touching that little top bit of here in regards to this high, the price is starting to break outside of the market. Does that mean that it wants to come back in here and it wants to change character and do something else? Well, don't know. And if it does want to do that, it very well may want to go and do this first and then start doing this. Okay, because of the liquidity that's building up below here. Yeah, let's go and have a look and see what was been happening in Asian session and over the weekend. Well, the market's been trading within this little range in here. Let's drop down to my 50-minute time frame. Okay. This was Friday. And then we've seen Sunday, Monday, and then the market is just trading. It's just trading within this little Asian session range. And then we had, look over here, the market's broke outside this range. Okay. And let's see when London open. I'm gonna drop my time frame and have a look. It's not the same with EJ as such. That play is more safe for our GU, all right, and EU pairs. Okay, but we saw the markets here potentially in London push outside of the Asian session range here, capture some liquidity. Let's see, does that mean that the market wants to first push up first before pushing back down? Who knows? Because remember, the market is always moving towards liquidity. There is liquidity. It's just taking this liquidity below this range here. There is liquidity above the Asian session range. And then the market may decide to come and get that bigger liquidity all the way down here. I don't know. It's the start of the week, and there's lots of stuff been happening in the Chinese market. Obviously, it just may have an effect. Let's drop our time frame down and have a look at this little liquidity situation on a smaller time frame. I'm going to put in a red line in here. Red line. Boom. All right. Let's have a look at GU in a minute. Let's have a quick look at GU because it keeps screaming my name. GU's pushing up some more. Have a look. It's pushing up into this area. Let's pop another alert in here. Pop another alert in here. It's very close. It looks closer on my broker. Candles. That imbalance is bigger. That imbalance is starting in a minute. And here we've got this wick that came up all the way up in here. So it's a little bit different. But either way, this is the kind of hit area that we are looking at. Okay, it's kind of hit area that we are looking at. Let me do something over here. Okay, sorry for my appearance. It's come from the gym. Okay, cool. Yeah, so like I said to you, for EJ, we was looking at this on a smaller level. We can see this liquidity being taken below here, and then on a smaller time frame, we haven't necessarily. We kind of have, I guess, seen some structure being broken over here. There's some structure being broken. Here is some minor structure in here. All right, we see the market breaking that structure over here, making a correction, and maybe only now, maybe pushing up above this minor structure, because I have a look at the minor structures here. Market's pushed above it, indicated, corrected, and only now maybe it's going to continue by closing here. Do I love it? Do I want to get involved in a buy? Let's have a look at in a bigger picture and understand this market and see what's going on. But the bigger picture is this market going to come up and just capture liquidity above Asian session? Is going to push all the way back up into here to close this imbalance first? Or are we going to push down here first before pushing up? Yeah, or are we going to not even give a damn about this imbalance and just kind of try and get down to pong? The market's pinged. Are we going to pong? All right, within our yellow range. These are all the questions that I'm having in my head. From a 1 minute perspective, which is very small, if this market closes above this wick at the moment, one may decide that they want to get into this buy early, like so. With a stop aggressively would be about here, below the last low, and safe would be below this low. But in my opinion, yeah, it would be about below this low. Okay. One's for 20 pips and one is for about 7 pips. All right, plus your spread. And if that was the case, the only way I can get into a trade for 20 pips is if I can see at least 60 pips in the run. All right. Now, obviously, the liquidity I said it might be trying to grab is above this Asian session, which is only about here. All right, so as a 20 pip trade, that's only a 1 to 2 or 1 to 1.6. Not great. Hasn't closed yet. right? It's coming back down. It wicked, hasn't closed yet. As a more aggressive entry over here, below the last low, if it closed above, that makes it a little bit more lucrative, 1 to 3 trade. Okay, so that's my outlook on that. Let's have a look at GU, see what it's doing. It's tapped into our little area of our little point of interest. Now, does that mean that we just hit the button that we're playing snap? Well, no, it doesn't mean that. Yeah, it'd be nice if it was easier just hitting the button and playing snap, but we can't just hit the button and play snap. We have to watch what the market's doing and see what the reaction has been or will be. Have a look at the reaction. We have had a little tap in there. Yeah, it looks like, you know, when you put your toe in the bath, it's too hot. We have had a little reaction immediately. The market pushed in the opposite direction, but because we're so small, it could be difficult for one to be able to see structure. If you're finding it difficult, go to your line charts. Yeah, and everywhere you see a little V is potential structure. All right, it's potential structure. It's potentially a wick that has a lower wick and a lower white wick or body either side of it, meaning, you know, structure. Swing low of that time frame. 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 Swing a low. Let's get close to that one of the time frame. Looking for that scenario. That wick that either side of it has small wicks or higher wicks. All right, higher wicks than this one in the middle. This one's the longer one. All right, as in you're getting this type of pattern that the market made. All right, you're getting that type of pattern. That's why the either side of it, the wicks are higher than this wick, because you're getting this type of pattern, and that becomes a smaller structural low. Okay. Now the market currently is, like I said to you, dancing around here. We are on a small time frame, but is this market going to start breaking this structure down here, or is it going to smash through here? Now, even if it wicks up here, I'm really interested to see where it closes, especially in this area, because this area is a little bit blurry of exactly where the imbalance is. It's a little bit blurry. It's a little bit like, is the imbalance here? Is it not here? I don't know. Maybe it is. Maybe it isn't. Maybe it is. Maybe it isn't. Okay. In regards to this little area here, if it lets me pull it back here, you see? So is this imbalance further up? Like I said, on my broker's account, it's a little bit different. But we're watching it now. It's really closing that imbalance up at the moment. Really is. Potentially, in my opinion, this imbalance could be all the way up into here. Okay, so like I said, the only thing we can do is look at it, read and react, and there's nothing wrong with getting in slightly late with a confirmation. We don't have to be early or first. And if that is the case, then that means this GU is once again pushed outside the Asian session to grab this little bit of hair hump here. Wasn't enough of a liquidity grab, because it respected the Asian low and pushed up again to grab all the liquidity that was building up over the weekend above the Asian low, above this little wick high, and in this imbalance. Yeah, capturing that fuel that potentially the market wants to go and do something else. I am also very concerned about this previous New York high over here, which to me has a lot of liquidity sitting above it because of all of those equal highs. I'm concerned about. So if this blasts through this area here, this will be the next area that I'm looking at. Like, what's going to happen here? Is this market going to, because remember, my overall, when I'm looking at this at the moment, I am thinking that we're in a premium. So in the back of my head, I am thinking to myself that maybe this market wants to sell off. Okay, if we was to go and pull up our relative strength index that we discussed and explained what they do, we will see how the market is extremely overbought. Look, we're up in these zones. We are up in here. We're already up in here. This is above this 70 point. Down here is the 30 point for extremely overbought. And now the market's actually going back into this even a more overbought area. Because it came up here, over here. In fact, it came up here first, look. And then didn't quite get down and came back up here again. Yeah. You see it? So this is just confirming what our technical analysis on our own drawing on the screen is thinking to yourself, we are in a premium. there is a high probability this market may want to turn around. Okay, have a look. Our zone that we was in there, we've had some red candles in there, some sort of reaction. Is that enough for us to get involved and hit the button? Well, unfortunately not. Because at the moment we're still making higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. There's nothing to say that this market is turning around as yet. Nothing. Apart from if we're just going by faith, we're going to hit the button because we think that we had a dream and God is on our side. Okay. Alternatively, we have to wait to see some sort of confirmations. We understand what our confirmations are, the indications, the corrections, the continuations. What I'm going to do, guys, is I'm going to go back in time now. We're going to test out some of these plays that I was talking about. All right. So I'm going to go back 1 week in time, which is 1 candle. So I can play my rewind tool and I'm going to go to this candle here, 1 week back. I'm going to wipe the charts. I'm going to go and have a look at this market 1 week ago. Okay, 1 week ago, and I'm going to have my indicator on, which is that indicator you can see with these little lines and things. Okay, which is just basically letting me see and letting me know, is this a week ago? Yeah, letting me see and letting me know where the sessions are. Okay, so we can see over here, we can see over here how the market's been pushing up. So this is Friday. So let's scoot forward then to maybe a week's not enough because we're just going to start talking about the same stuff we were talking about last week. Let me go here. Let me see if we can go like 3 weeks back. Okay, because the only things we're going to get quite small in the time frames. So I want to be able to get the data. I don't want to go too far back and I can't get the information. All right, so let's go down here to let's do our top-down analysis real quickly and see what we think from a bigger picture. Okay, from a bigger picture, we're looking at this market and we're thinking to ourselves, okay, you know, we want to know what's happening with this market, and we can see that the market is bearish. All right, nothing new there. We've been looking at this from some time saying the same thing. Nothing new there. Okay, we can see this market has been made this high point here. We had a reaction to that, breaking some structure, and it's come back into this level. If we was to connect some dots, you know, we could connect some of these little data points that have been touching here. Could do, blah, blah, blah. I'm not even going to bother. All right. Now we're going to drop our time frame down to our daily. On our daily time frame, we can see ultimately that this market has been trading within a range. The market came down here and it's pushed all the way up to this level here, and then we're trading within that range. All right, from here to here, which is sitting within another bigger range. But for now, I'm only going to mark out this one. Yeah, sitting within this high and this low. Okay, but for now, we're going to mark this here. Okay, let's drop down to our 4-hour time frame. Okay, in our 4-hour time frame now, the way I've got that tool set up, we should be starting to see the tool. Maybe it's not set up in that way. Let me check. Go to the setting. Oh yeah, on a 4-hour time frame, it's supposed to be showing us something. At the moment, it's not. Oh, it is. I can see it. It is. It's quite faint. Okay, cool. So if I zoom in, you can see a little red line there is Asian session high. The Asian session low has already been taken. What day is this? This is Friday. So let's go forward to Monday. All right, let's go forward. Let's try and get into Monday. This is Monday here. All right, so have a look at the Asian session on a Monday. Let me drop my time frame down to an hour. Can you see this red band? So this red band here, let's have a look on a very small time frame and try and see if we could see anything in regards to here of a quick play when London session open. All right, let's see if it's possible, if there's anything that we could see. All right, so I put a little vertical line in there, London session open. All right, at 7 o'clock on the 17th. I'm dropping my time frame down on a 15-minute time frame and having a look. Okay, and I'm trying to see whether there's anything here that looks, you know, of interest. Okay, well, this was the Asian session. We saw this market in here. Now we saw a push. I'm gonna drop my time frame down to 5 minutes. This push of this candle broke structure below Asian session and took the liquidity. All right, drop our time frame down to a 5 minute. You see, this candle here was a push that pushed through here and took the liquidity from below here. All right, this little push in here. I'm going to drop all the way down to the 1 minute time frame to see if we can get quite accurate there. Having a look at it. All right, so you can see here, this red line here was the Asian session low. All right, so have a look. Okay, with the Asian session low here, what can I say? All right, I don't want to reach, okay? I don't want to reach. We can see that there was a breach of this Asian session low here. So from here to here, this push broke the Asian session low. It kind of didn't close there though, just kind of wicked there. And then it made a correction and then it continued. But in that correction, where did it correct to? It corrects to this imbalance that happened in here, which is actually just before London opened. But when London actually opened, it left. But even in this leaving energy, let me move this out of the way now because we know where London is, it's that yellow box. Even with this leaving energy, look, boom, big red candles with strength and speed. Those big red candles with strength and speed created imbalance. And that it was that candle there that broke and closed below this Asian session level. So look, there's two little levels in here. One which is a bit reachy because it wicked below and broke this structure here, then came back to the imbalance and started to go. And then let's have our closure one that definitely closed below this red line and created a huge imbalance. When it created that huge imbalance, we're expecting the markets to come back to this area to give us a small trade back down to structure. Let's see what happened. We pull that out, okay. Market didn't quite get in here. Market didn't quite get in there here. Didn't quite get in there here. Liquidity building up in here. We know it's going to get in here. Boom, we got in here. So for argument's sake, let's imagine that we did see that as some sort of play within the London session, based upon the setup was in this London little session. It's a small move back down. Well, it's not a small move, depends upon your entry. To get back down to structure, let's see. Remember, none of these strategies are 100%. I'm trying to make this in a way whereby I don't, I'm not just cherry picking, yeah, the trades. Okay, I just want to, I'm trying to do it in a way whereby I don't know what the outcome is. Okay, you know, is this market going to get back down to these levels? We saw the market tapping into here, and no. Oh, actually, tell a lie. Let's have a look. 1 second. Let's place our stop above structure, which will be above this little structure here. All right, and let's see whether or not we got back down in any sort of way. And we did. And when I say back down to structure, back down to where this energy originates. So if I go to my 5 minute time frame, you'll be able to identify that this is structure. And in my opinion, you should be out of this trade for getting in there at such a small time frame. For getting in at such a small time frame, you're looking at that first bit of structure, this landmark, as a great landmark. Now, this entry itself wasn't fantastic. All right. This entry itself, well, you can get a lot smaller entries than this with this power play strategy. Okay, and we can actually see here that market, yeah, came back to a smaller imbalance at the top in here. All right, it didn't, this bigger imbalance that was a bit of a void that we saw the market mucking about in. The market actually, when I look at it, came back to here. That imbalance here. Let me get rid of this one. Actually came back to that imbalance here, and that could have been where we placed our entry. Oops. Have a look. And that would have been an extremely lovely trade, like so. Even placing our stop above that structure there, that's a 1 to 14 trade. Well, let me scoot even back up here, back to this structure, 1 to 11 trade. Now, this is what I'm trying to show you. I'm trying to make you make a transition between us being able to identify some of these smaller trades where we're in and out, you're done for the day. You just caught a 1 to 10. You don't need to be back in the markets again. Now, this is a one-off. I'm going to go and check again. Let's go and check again. Let's go and keep having a look. I don't want it to be the case that, you're just getting all cherry picked. I just want to try and test out this play at the start of London and New York session. So that was London. I'm going to give that one a tick. That one played out. All right. I want to get to the next session, which is going to be New York session at 2:30. See if we have the same energy. And I'm going to then look at the next London session also, yeah? So I'm whipping this. Oh, here we go. Oh, I'm going to go back a bit. Let's go back. We get it back here, okay? All right, so we've seen that the markets has been in here, and Asian session, ultimately, this Asian session was taken by this London push. All this push down here took this Asian session. Now we're looking at this liquidity below here, and definitely we're concerned to see, does the market want to take this liquidity first? In fact, let's make sure that we know our higher time frame narrative. All right, because I have forgotten it. Don't know where we are. So where we are is that the market's pushed down and broken this structure, indication. After an indication, what are we expecting? After this indication, what are we expecting? This indication, a bigger time frame, what are we expecting?
A correction.
Exactly. So on a smaller time frame, I'm not trying to say what the market's doing overall until the end of time. We're expecting that liquidity's been taken from there, indication. We're expecting the correction. We're expecting that the market may be bullish. All right. Whether or not we want to be in it, that's what we're expecting. On this day, on the 18th, this is what we're expecting. All right. We're thinking, okay, that's maybe what's going to happen. We've seen that the Asian session was here, was taken. All right, but it failed to make a lower low as a mark. Well, we need to play it forward a little bit more. All right, but it looks like it's failing to make a lower low here from this push and started to push up here. If I drop my time frame down to a 5-minute time frame, the market came all the way down here. So when it was coming down there, it started to make structure on the way down there. If you can't see the structure, draw your lines. Your line shot. Look, lower low, lower high, lower low, lower high. Broke the structure, lower low. Failed to make a lower high, push back up here. So it failed. It's like it was feeling tough, like all of the England fans yesterday after the alcohol and after losing, it was feeling tough, started throwing their arms around. We saw them wherever we was, I'm sure it kicked off, all right? Failed to come and break this, to break this lower low over here. There's a structure over here, and started going back where it came from, where it felt safe. That's making me think to myself, okay, then this little energy here pushing below this level could have been a liquidity, could have been a grab of liquidity below here. That's what I'm thinking. And if I drop my time frame down, I'm looking for that strength and that speed and any point of interest that shows me that the market's doing something. Okay, so look over here, the market pushed down here and it moved here with strength and speed. 1, 2, 3, 4, all of these candles moving so fast that it actually created a gap. Okay, and when we go to a smaller time frame, we're going to see that there was a break of some structure on a smaller time frame. Let's go down to our 1-minute time frame and have a look. Let's go and have a look on our 1-minute time frame. Can you see the structure was here? If I put my little white line in, previous high before this lowest point, this push is what broke that structure. That push created an imbalance. That market came back to that imbalance. All right, came back to that imbalance, and this is at 1 o'clock. At 1 o'clock, that market came back in here. This is just as New York's heating up. Let's have a look. I'm looking for when New York started. So this here was the point of interest that it tapped in there earlier. Why was it a point of interest? Because the market broke structure, created a gap, and that market came and fell back into that gap. On a small 1-minute time frame, it's not easy for us to see another indication, correction, continuation from here. We can, because this is a little bit of structure as narrow as it is. In here is a little bit of structure. Can you see it? A little bit of a mountaintop. All right. And that market indicated past there, corrected without breaking the structure and pushed back up in here. Over here now, just about continuing. If you entered here, you stop below there. The market seems like it wants to continue pushing up. Let's have a look. It's not what necessarily what I was looking for. Yeah, I was looking for something a bit more clean. It doesn't fall into the exact same Asian session play, but it does fall into grabbing liquidity, moving away from the area with strength and speed, and causing an imbalance or inefficiency in the market. This is something that we've seen is common now. We've seen it twice. We've seen it just happen just now, even in present time. All right, let's hit play and see what happens. Okay, market pushes up from this area here where you could have had an entry based upon that liquidity and seeing that play as of the market coming, eating the liquidity over here and moving away with strength and speed. And if you wanted to wait for indication correction continuation, you would add a slightly bigger area stop. If you wanted to just get in here on the basis of here's the imbalance and you was placing your stop either below the imbalance or below the swing low, you'd have been in the game right now. Below the swing low is really where you should always place your stop. Anything else is seen as aggressive and ultimately heightens your risk of being stopped out. All right. Now, let's say, for example, where is this market going? Well, we can see an Asian session high here with lots of liquidity sitting above here. All right. So let's zoom out. Let me remember exactly what our higher time frame narrative is that we indicated here, and the market's going to push up. But after it captures this liquidity, I'm thinking to myself, there might be a possibility the market makes a retracement first and then possibly continues going pushing up. Let's have a look. Let's have a look. I'm going to hit play. Eats that liquidity here properly. Let's see what happens. See a reaction. Market continues to push up. All right. So it takes this liquidity here. We have a small reaction here, which broke some minor structure, but the market doesn't correct and continue. It continues to push up bullishly. All right. So if we was in that trade, we're still going. There's no reasons why this market has told us to get out of this trade. All right. At no time here in our 5-minute time frame did the market indicate, correct, and continue against us. Not in this entire push, making this trade ultimately here at 1 to 10. But we look into the left and we're trying to see where is it may it be going. All right. It's closing up all of this imbalance that was sitting in here. And above this level here, we see strength and speed that pushed from here and broke structure. All right. Strength and speed, even though we're on a 5-minute time frame, that from this point here pushed and broke structure, means that there was some huge selling coming in from here. So I'm anticipating if the market does get up here to capture liquidity, then we'll see a reaction from around this area. Let's see. Let's see. Still on a 5-minute time frame, no reason for us to get out. Now there will be, because the market, have a look. The market got up into this area, which is exactly here. All right. This is all this area. It's from here, the market had strength and speed. So instead of me drawing this line, which I think might be misleading, I should have maybe done this. From this area, we've seen strength and speed that broke previous structures. We cannot ignore that. That means that there was definitely some sort of sell-off happening there. That's what it means. Yeah. Now, I don't think this is going to sell all the way to hell, because my overall narrative is I think this market maybe wants to push up, yeah, and make a retracement. Where do I think that retracement might go? Well, from here to here, I could just start looking at some things that I've seen historically, that maybe the market wants to make a 50% retracement. All right, in here. That is just a general energy, because I understand the markets like to make 50% retracements. Okay, but I'm watching it to see what may happen. All right, let's see what happens. So the market's now indicated over a bigger structure. Have a look over this area here, this area here, indicated. Are we going to make a correction? Are we going to push up? Let's have a look. I'm hitting play. So look, even if you look on a smaller time frame, this was the Asian session. So this is now Tuesday. This is the Asian session, Asian high, Asian low. Let's have a look to see if we saw anything that happened, as London opened. We saw liquidity taken here. Market didn't really do any kind of setup that we want to see, but we've seen this definitely here is a lovely push here below this liquidity. So you can see this here, things building up. Liquidity is building up below these levels, below these levels, below these levels, below Asian session, but below these levels. And this spike here is a definite quick liquidity grab. Yeah, below some of this liquidity that was sitting below here, and even just about this liquidity that's sitting below here. This is a quick, when you see a spike like this in an area of interest, it's a quick grab. From that quick grab, I'm going to drop my time frame and let's have a look on the 1 minute time frame and see if we can see anything going on. From that quick grab, that market starts to break some minor structure in here with strength and speed, indicating correcting and continuing. Now, we may well see this market come and dip back into this area. All right. We may well see that market come and dip back into this area here. Okay. But even if we were just looking at indication, correction, and continuation, you could be in this trade with your stop below here. Let me try and see, because I don't know, guys. I might get egg on my face live for everyone to see, YouTube, etc. Let's have a look. We're going to place one stop below here in regards to an indication, even though it's a minor structure on 1 minute time frame. This is an indication closure above this structure. This is a correction. This is a continuation. You could have turned around and opted to take this trade like this, or alternatively, let's see if we can just tap back into that little bit of imbalance. All right. And see, so that first one, you could have been in the trade already. And the second one, you could have turned around and been like, okay, I'm taking this trade like this. Yeah. Or even just on that imbalance. But let's just go for it like this for now. Okay. There is some imbalance above it, which somebody else could turn around and include that imbalance. But I really want to just take into consideration that candle that broke the structure. I'm testing. I'm having a look. Are we going to just get egg on my face and we're going to fall straight through here? Hit stop loss? Or is the market going to tap in and give us an absolutely fantastic entry for 2.5 pips? I don't know, but let's see. Wait a minute. No. All right, egg on our face. Okay, so though we had that indication, correction, and continuation here, so this first trade, and it got up to London, this little London, it was still within the London session here. It only ran for 1 to 1.5 before it decided that it wanted to continue pushing bearishly. All right. So that other area, which just shows us that even if we get a tap into imbalance, we should wait for some sort of indication before we hit the button if we're able to take a market execution trade. This is what our backtesting can show us, because this trade here isn't a loss. Our indication, correction, continuation is not a loss. It went to a 1.7. You should have been risk-free by the time it got to a 1-to-1. So you just didn't make any money. But this one here, based upon this small energy that broke structure here, went through. And let me explain to you why it isn't a high probability, high energy trade, because the reality is that look at how this structure here, which is Asian low, look how it was broke before. It was kind of broken before and crumbled away and, you know, chipped away out with all of this kind of weird action here on Tuesday. You know, that it wasn't like the Asian lows were intact and then it was just taken and then it left. So this was a little bit soft, not a very strong area. Let's go and look to see where New York is. Let's have a look at New York, see what's going on. All right, so and if you want me to put a line by New York, let's put a line by it. We know when it's coming up. This time we don't have to guess. This is New York open around about the 230 point, yeah. All right, so I can come out of this here. And we're gonna hit our candles as we go and we approach New York. Now, as I'm watching it, this is all London session in here now. And I've seen that the market here, we had a break of structure indication. And this market is pushing back down here, correction. Okay, remember what we said before was a higher narrative that we think the market could be bullish. This is all correction. The question is, where's this correction going? Let's see, did it mitigate any of the areas that we drew previously? Well, it did here, because we said that was an entry. We're watching it. I'm going to watch it. Let's drop our time frame down to a 5 minute. All right. London low. All right, let's have a look. We can see over here a previous New York low over here. All right, this is New York low previously not mitigated this liquidity that was below this New York low. We're here at the moment. And this is the new New York session that's going to be open, but we're currently in London session. Let's see what happens. Ah, press the wrong button. I press. Oh no, sorry, I can come out of that. How do I get off this? That should be okay. Oh, don't tell me I ruined it. Did I ruin it? This isn't. I ruined it. I ruined it. What was we looking at? Let me see where we was looking at. Guys, I ruined it. I pressed the wrong button just as in the moment of truth. I'm sure there should be some drawings. Did I put any drawings on the... Here, I put a yellow line in, didn't I? Yes, I did. So we're going to say, well, hopefully, that's what we was talking about, coming towards that New York time. I believe that's where we was. I will find out in a minute. It'll start coming back to me. I was saying it was going towards a New York low. Yeah, I believe this is where we were. Because I was saying it was going to, there's a potential New York low over here. We've seen London session in here. Let's keep clicking forwards. So look, if this market is now here, and we're looking at it, we're thinking to ourselves, okay, what's going to happen upon New York open? Make sure I'm clicking the right ones. We can drop down to our 5-minute time frame or 1-minute time frame. Candles push it. All right, that is the open. All right. So this here is New York now opening, and potentially now we've seen it pushing in this direction. Have a look what's over here. This is our red line. This is Asian session. Are we going to capture the liquidity above Asia session? Or is that where we're going? All right. Because ultimately, if we're going to capture that liquidity, we were saying that we think this market's going to be pushing up bullishly anyway. All right. So on that basis, we might be looking at indication correction continuation for it to continue. We may wait to see it capture this Asian session high liquidity and see what it does first, which I think is the best course of action. All right. Let's have a look. Nam. This is Asian session high over here on a 5-minute time frame. See if we've got a nice closure. Got some closure above there, a nice wick above there. Let's have a look to see whether the market's going to correct and then continue, or are we going to break this 5-minute structure in New York? Okay, let's have a look. And we have. So the market has pushed down after getting this liquidity grab. The market has pushed down, made an aggressive push down. All right, within the New York session. It would be nice if it was, not nice, but it's something if it's just when New York opens, but this is within our kill zone. Hence, this is, if you haven't noticed, this is why London just has a London block here, because that's the kill zone. All of this is London session. This whole yellow line is London session, but the little block is the kill zone, the area whereby, look, boom, 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 trades can get executed, yeah? But this is all London session. So within this New York session, we've seen it push up liquidity grab above the Asian session on a smaller time frame. I'm gonna drop down a 1-minute time frame first and have a look, and then we're gonna drop down where we can stay on this 5-minute time frame here, because we can see that this push has broken structure. We're expecting to see this market come back, especially to the candle and the imbalance that formed from that push. Okay, we shall see. So what we'll do is we'll look at a 1-minute first. Oh, then we'll just stay here for argument's sake. Now let's look at a 1-minute first, because we don't know when it's going to come back. So on a 1-minute time frame, we can see that this red line here, which I'm going to extend. I'm going to try and extend, make it red, was Asian session high. Look at how the market, we see the market building up in here, or there was a build up in here. We see the market push up here, and then this break of structure in here has broken this area here, this small 1-minute area here. Okay, and then the market continued to push down. I'm going to identify this little area for imbalance in here. I'm going to identify it. Is this somewhere the market wants to come back to? Okay, after going and tapping into some sort of structure, is it somewhere the market wants to come back to on a smaller time frame? Let me get rid of this imbalance that has been filled. And on the 5-minute time frame, we've seen a 5-minute break of structure. Let's play things forward. Market has broken significant structure, broke structure here. We're on a 1-minute time frame, but we've broke 5-minute time frame, broke this 5-minute structure. All right. Again, I'm still watching. Is this market going to kick back into these type of areas? Now, on a 5-minute time frame, the area I'm interested in is here. And because the 1-minute has already broken past this level here, this 1-minute entry here is void for me. I don't think the market's going to necessarily come back over here, but I'm watching it. Let's have a look. Watching it. Watching it. It's ramping there. Oof. So we saw the market come and push back into this level here. We saw some sort of reaction as the market was dancing around. Okay, but remember, our overall bias is that we thought the market was going to be bullish. So we're just seeing whether or not we're going to get a response from here. But the overall reaction for this market is the market was going to be bullish, pushing up. Ultimately, we should have been down here looking for entries or waiting to see this structure after it indicating up here being broken. So on a bigger picture, this here indication, this is a correction. This candle that closed, wherever it may have closed, is the continuation. All right. Indication above that level, which is over here, that structure over this Asian session, over this structure here, sorry, which captured the Asian session high here, which pushed down here. I really want to see how we would have got into the trade here on a smaller time frame, but I think we missed it. All right. But either way, we thought the market was going to be bullish, pushing up into these levels. So on a bigger picture, wherever this candle closed over here, that 40 pip zone is an entry pushing up. We wouldn't be taking that 40 pip zone. Why? This is straight into another Asian session over here. Okay, so this is another day. So the market came up in here and it didn't do what we thought it was going to do in this zone. We saw a reaction as the market slowed down and started thinking about it. But you know what happened? Nighttime came. Look at that, and then we're out. We're not going to be sitting here looking at this candle at 9 o'clock. At 9 o'clock, we're done. The market didn't do what it's supposed to be doing. We're not in the trade. We're going to wait again for a new day. This new day comes as Wednesday. So we start again here Wednesday. And here is the range, the Asian session range. I don't know if you can see it. Maybe I'm going to brighten it up a bit. It's a little bit dark. Let me brighten up those transparencies. Box tap transparency, make it 80. All right. So you can see this here. A bit brighter now. This is the Asian session. Now let's go again back to that strategy. The Asian session is there. Let's delete that. We're looking at this Asian session here. Where's it gone? Look at this Asian session here. So this is now where our focus is, the Asian session. We're watching the Asian session, all right? And then boom, right before London opens, we see that liquidity taken. And this is completely different to the other one we looked at, where the liquidity was chipped away at. Then it halfway through kind of made a little thing. This is different. This low was maintained, and then boom, we've seen a liquidity grab in here. Let me drop my time frame down to a 1 minute and see whether or not on a 1 minute time frame there was some sort of entry. Let's have a look. On a 1 minute time frame, there wasn't really 1 minute an entry on a 1 minute time frame, but there is an indication correction continue. Well, not really. This wick comes all the way over here. You can't really see it, but this wick comes all the way up here, meaning the continuation candle closes has to be above that level. All right, but I'm interested in this imbalance. Yeah, I'm interested in this imbalance here that broke this structure. So what I'm going to do once again, I'm going to check it out. Here, that orange box there. Let me get rid of all the other stuff. Get rid of this red line, which was Asian session before. Get rid of that. Get rid of this. I'm interested. Is this market going to tap back into here before continuing to push up to a level? We did draw in our 50% level somewhere. Yeah, that green line. I'm interested to see whether it's going to tap back in there or not. Let's have a look. Because on a 1 minute time frame, unfortunately, there is a long green wick that came here. So even our indication correction continuation, the candle would have to be all the way over here for entry, and I'll stop all the way below here, which is quite big. So I'm not watching that. I'm hoping that we can get back into this level here, wick in here, and push up. Let's see what happens. Might get egg on my face. We're straight into New York session. We're straight into, we're dancing around. Let me go to my 15 minutes, taking too long. Okay, here we go. Now we're in another Asian session. So this is showing us how when we see a play sometimes we have to wait for it to play out. Now, we could have still been taking trades in and around here based upon what's going on when the market keeps taking liquidity. But based upon this setup from whenever we looked at it, this still is a point of interest that hasn't been mitigated. So when the market comes down here 1 day later, we are interested because of this previous area that the market was in here. On a 15-minute time frame, we can see this imbalance being a bit higher than that, like we're tapping into it now. But on a smaller time frame, which would be in, we'd be able to see how the Asian session is balancing right below some of this liquidity in the area of interest. So I'd be looking for a wick into this area and for this market to continue to push up. Let's see what happens. I may get egg on my face, but I don't mind. All right, we're in that area. And it's taken that. All right, so we took this on that instance for that area, that bigger area of interest. We saw the markets here. We actually saw liquidity taken here, and on a smaller time frame, we did see a reaction, but the market did not continue pushing up in that area. All right, so we can put that down as no. Right, if we was looking for that buy, we can put it down as no. That's not what played out. Okay. Now, one thing that we haven't done because we've zoomed back, we haven't looked at the higher narrative to see exactly where we are in the range. Okay. So I'm looking at this thinking to myself, okay, interesting. I'm trying to show this this session energy, but we have to understand where we are in the bigger range. And where we are in the bigger range is, have a look. This market made a lower low, pushed up into these levels, making a lower high, a lower low. Are we looking like this? And are we not necessarily going to get up into that green line? I don't know. Yeah, I do not know. But at the end of the day, this market's pushed up here on a 2-hour time frame, broken structure, pushed up into this level. Is this the range that the market wants to trickle down in? And us thinking to ourselves, we're going to break outside of this range is not realistic. But if I'm looking like this, this is a high, which I don't necessarily know yet because the market hasn't broken this structure here. Let's look some more candles. If we do break it, yes. And I say this is a high, but therefore this is premium. This is a premium level in here, and we can't forget our basics of trading from, high supply area or discount to premium. Okay, so therefore, the only thing we should have been looking at up in this level was sells. Okay, we shouldn't be necessarily looking for buys. So that's an oversight because we're looking into these little ranges. But I really want to show you guys these plays using time-based trading. We had a couple examples earlier. We had one or two here that didn't play out. Let's have a look over here. If we're seeing that the markets came and tapped, see what we should have been looking for is this. If we're saying that this is a premium area, at the point when this Asian session here broke out of this area, we understand we're going to see a retracement reaction, which can give us an early trade. Okay, let's have a look. You can understand, look, when this market broke out here, that we're going to see a reaction back into the area that broke that structure, but we should have been looking for sells in London. All right, if we think that this market's in a premium. Okay, let's keep going one more time. I've seen the session we've run on some time, no problem. I want to get to another, frame in a potential place. I want to get to Asian session. Here we go. We're back into Asian session over here. Now we've moved away. Here's still a premium area that we're moving away from, but we're watching it because this market, we're looking about this market trading from ping to pong. So from ping, top end from in a premium, down into pong, into a discount down by this white line. But we can see structure here. We can see liquidity sitting below here, liquidity sitting below here. Okay, this is structure. You see equal lows sitting below here. So though we're thinking to this, the market wants to be coming down here to this white line and this bearish push, we have just taken some liquidity within this Asian session. All right, let's go and have a look at it. So we're watching it in the Asian session, watching what's going on. We saw a big push above here within that session. Let me drop my time frame down. And that push was tapping into previous imbalance where we saw strength and speed. All right, where we saw strength and speed. This is on a 15-minute time frame in here. We saw strength and speed here. 1, 2, 3, 4, 5 candles. We can't ignore that. And the market went and tapped into there and pushed above this Asian session. Does that mean this market wants to be bearish and continue pushing down? Let's have a look. Let me drop down time frame down to my 5 minutes. We can see what's going on. It's quite interesting, guys, because I can, you can see in me, I made a couple mistakes. I haven't looked at the bigger picture. All right. we can see things play. And this is how you backtest. And if you start seeing something happening over and over and over again, which I haven't really illustrated with enough examples this morning, okay, but I want to illustrate that there is key times that you can be in the market, which is going to be New York, like London and New York. So here we've seen this Asian session, liquidity being taken on a smaller time frame. If I saw that happen on look when it happened, right when London started, boom. What we're waiting for at this point in time, we're going to be waiting to see some indication, correction, continuation before we can get involved. And it's a bit difficult here because the structure is all the way down here on a 1 minute time frame, okay? As in the main kind of structure here, all right? It's going to be all the way down here because that push was so quick. At that point in time here, we're seeing indication, we see some correction, we see some continuation. What I want to be getting in here at the bottom of this session after this push, not really. If I did, my stop would have to be all the way above here. Okay, if I did get in there, my stop would have to be all the way above this level here. 20 pips, it's not the end of the world, but it is quite large for GU. Okay, because GU on a daily basis only moves about 35 pips. So therefore, if I got into this trade here, this trade is not going to play out any type of profitability for me in that day. So therefore, instead of me looking at that play, even though ultimately I think that's where we're going, all right, ultimately that's where I want to go, trading from a premium, blah, 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 have a look. And now got my eye on this Asian session low. So I'm thinking to myself, okay, well, I've missed this because it happened very quick, tapped into this imbalance, pushed all the way down here. Is this market going for this Asian session low before there be some sort of reaction? Maybe that reaction happens in New York. Maybe it happens within this kill zone London. Let's have a look. All right, so this is the Asian session low over here. We're going to finish up here because I didn't realize the time. Asian session low here. Let's see what happens. Nam. We've taken Asian session low. So at that point in time, when I see Asian session low, I'm thinking to myself, I'm looking for an excuse to get involved, knowing that there's going to be some sort of reaction in the opposite direction that should at least take me back up to the previous structure of where that push started. All right, so we're going to watch it. All right, market's pushed down, still in London, it's fine, but we've taken in London, so London session has taken the Asian session low over here, liquidity. Okay, I'm just making sure I'm looking back to see any other sessions. Over a 5 minute time frame, make sure I'm not missing anything. Oh, it's gone all the way back here. Let's have a look. And what I'm going to have to do here is I'm going to have to double click into that indicator. I don't need to, but I'm going to double click into that indicator and I'm going to add more. See, it's only giving me 3 sessions. I want to make it this be 300 sessions. Okay. So I should start seeing more indicate. See around here. All right. So all of these levels here, we can see that the market's going to take in the Asian session low over here. And the next little session that we can see here, we can see like a London session low that hasn't been taken all the way over here, all the way over here. All right. Did the market get down to it? I don't even know if it did. And let me identify another little previous New York session low because there's liquidity there. And I'm thinking to myself that maybe this market, after taking this Asian session low here, maybe it's extra greedy, wants to get down to this previous London, New York session low. And when New York kicks off, maybe then we get a bullish push, yeah, or at least a bullish push back up into this structure before it falling bearishly. Because overall, remember, we were thinking to ourselves that we're in a premium. Okay, so like I said to you here, this push up in here is essentially framing us to move because it's showing us that the market wicked up in here and was shoved down. So ultimately, we're looking for an opportunity for this market to come back in here to start playing back down. It's just grab the liquidity from below the Asian session range. I'm expecting to see some sort of push up in here for maybe the market to keep coming down into these levels. All right, let's have a look. Let's have a look at the look. Market's pushed down now, fully grabbed those 2 liquidity levels, which was a previous New York session, previous London session. All right, and on the 5 minute time frame, it's indicated here, corrected, and just about continued over here. But for me to get involved in this trade here, my stop loss would have to take into consideration all of this imbalance. All right, let's see what happened when New York opens. Let me put a little line where New York is so we can anticipate it. Around about here. All right, I'm going to be clicking, see what's happening. All right, so now that area of interest, the market has taken that liquidity, it's pushed up into these levels, okay? and it's pushed back into that area where structure was broken. Remember I said to you, we want to see that candle that breaks the previous structure. Well, this is the previous structure. And if I go on a larger time frame, this is the candle. All right. If I go look on a 15-minute time frame or half an hour, maybe this is the candle in here. Can you see it? Maybe half an hour, it illustrates it best. That is the candle where there was strength and speed that created an imbalance. So I'm very interested in this little space in here. Might be able to get a little bit neater if I drop my time frame down, but I'm interested in that space. Now let's see whether the market taps into that space, which we have tapped into it here, and whether this reaction now is going to continue pushing down, breaking structure, or not. And we have to wait to see, because it might just do that. It might dilly-dally, it might do it at London or not. But if we're doing restrictive trading, and we're only wanting to be able to take these trades within certain zones, when it's outside the zones, we don't need to take the trade. So let's see what happens. Tapped into that level, have a look, tapped into that level, that point of interest, and we've had a reaction that is now breaking some structure. We've come down to this previous little London low, breaking structure, right? So that just shows how that indication, that candle that broke the structure gives us a bit of a target, because on a half an hour, it came in there and tapped in there perfectly. And on a smaller time frame, let me have a look at a 1 minute. Let me see if I can get even smaller in there. Have a look at the 1 minute. On the 1 minute time frame, look at the imbalance, which is just up in here, between here and here. Then that market came and tapped into it beautifully before running off, okay? Which is part of our indication, correction, continuation. So let's see whether or not this market's going to continue pushing down here and breaking outside of this structure. Once again, we've taken this liquidity. I want to look to myself where maybe this market's going to go. We know there's liquidity below this wick. So that's another area, that previous London. There's still more liquidity below this wick. Look, the market came all the way down here, then was shoved up. But let's look to see what else, if there's anything missing, or anything else I can see. So this is the task of you being able to look in the markets, understand what your overall bias is, and to be looking to see where the markets could be going. And you can see all of this energy in here, and the next kind of liquidity level, which is a kind of like a New York low over here. Then we've got a London low, we've got an Asian session low over here, and probably some imbalance in where we are currently right now. So maybe we see this market push quite deep into here, yeah? Or maybe this market just taps into a smaller imbalance and pushes up. Either way, we're in the sell from tapping into our lovely little zone over there, and we've seen the lovely reaction of what we predicted. Let's see what happens. Market is taking that liquidity from below New York. I'm expecting to see some sort of reaction. And when it takes that reaction, then once again, when it grabs some more, this is New York. Look, right on New York open, have a look. Right on New York open, if I can move this yellow line around here, we've seen the market push down here and capture, that's 1 minute, 2 minutes, 3 minutes in, push down here and capture that liquidity here. Nam, 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 nam. And then New York is now trading within that high and that low. All right, is New York going to continue to push bearishly? We've seen this reaction in here, push, capture the liquidity, but look, the push out didn't break structure. The push out from capturing little liquidity that was building up below London, didn't push past and break this structure, which for me is a bit, why didn't it push past here after grabbing the liquidity? I'm concerned about that. Let's see what happens. Watching it. Still hasn't broken this structure. Came up to the top of this structure here. Seen a bit of a reaction. Let's see what happens. We're watching it. This is us reading the candles. We can see these concerns. We can see over here this liquidity over here. We can see, if I get rid of this now, get rid of this because this has been filled. Get rid of this. We can see here that there's liquidity building up above there on this London session here. But the moment the market's trading a little bit sideways in here, we're going into a new day. This is understanding the sessions. Another Asian session in here now. So now when we go into this Asian session now on Monday, we're thinking to ourselves, okay, here's the Asian session trading here. Below we can see New York liquidity over here. And we're thinking to ourselves, it starts to present some stuff. Let's see how the whole Asian session plays out, how big the range gets. Okay. We've seen the market dribble outside of the Asian session. Indicate, correct, continue. In my opinion, maybe this market's going to try and go for this liquidity. Go for the liquidity above these highs. Let's see. Yeah, pushed all the way up into these levels. This is London session now. Pushed all the way up into these levels. So like I said to you, we was in here and we saw this indication, correction. Look when it continued. Boom. Right in our kill zone, in our London session. Right in our time when I said that we could be trading. Bang. Facing our stop if we wanted to below the last low. Or we can find another more significant. If you want to go all the way down here, I wouldn't bother. All right, it's a bit too far. But even down here, it's only 16 pips. But I'd say, look, below this last low, you'd be safe. Here, and that market's pushing right up into those levels of interest. Okay. Are we going to take this New York high over here? Let's have a look. Nam. We do take that New York high because that's where the liquidity is and that's where the market is trading towards. Once again, a lovely successful trade. All right, pushing up there. It's 1 to 3. But on the bigger picture, let's have a look. We're starting to break outside of this range now. This range that we drew in here, we're starting to break outside of this range. We just took some liquidity from here. You can see I was taking liquidity from this high here, and now there's previous New York session. All of this is a nam liquidity grabbing the liquidity. I'm expecting to see some sort of energy in the opposite direction. Okay, and like once again, you can use the ranges at New York now. Open, we're pushing up in here. This is New York. We've seen that the markets make it after grabbing all that liquidity from here, from this high, we've seen a reaction. But ultimately now the market is bullish. Look, it's making on a smaller time frame, making higher highs, higher lows, higher highs, higher lows, higher highs. Is the market going to make a higher low? Is it going to go back to the battleground? Have a look of where it broke the structure. Have a look at that candle that broke the structure. Even if I go to a 15-minute to make it easier to see, this candle is the one that broke the structure and grabbed liquidity. Is it simply just going back in there to tap in there to have to continue its higher highs and higher lows? And I'm not trying to say when it comes in there you just hit the button. I'm saying that this becomes a point of interest that you can drop your time frame down for argument's sake, and you could be looking for indication, correction, continuation. And better still, once you see it, you could be ultimately saying, you know what, I'm only going to take it if it's within the kill zone. If it's within a kill zone. All right. Now, this is the New York morning session. There is also a New York afternoon session. Okay. But we're watching this market's just here. It's tapped into an area of interest. I can still see some smaller area over here, which might be a bit more accurate. Let's play it forward and see what happens. Are we going to melt through here, or do we have a reaction here for it to make a higher high? Let's see. On a smaller time frame, we're breaking some structure. Breaking some structure. You know, are we going back up into those areas there? Back into New York highs? I'm watching it. So you can see how the market came back into that point of interest. All right. But vice versa, let me show you what it also did, because this is what you're watching the market on a smaller time frame. We are on a 1 minute time frame. You're seeing all of this playing out, because above here is liquidity. Above here is liquidity. Above here is liquidity. Above here is liquidity. And this was the first push that broke the structure in here. Yeah. And the market came back to that imbalance before starting this energy. Yeah. So the market came back to that first push that broke structure. It's making higher highs, higher lows. This is the first push that broke that structure. And in that candles where we look for the inefficiency, and that's where the market came back to start that push. But it did that push now, tapped into the other area of interest we was previously looking, and started breaking some smaller structure here in here. Is this market going to push up and capture this liquidity above here? Let's see. And then we finish up. Let's see. Let me go to a larger time frame. It's going to take forever. See, market's pushed down. over here. But again, this is Asian session now, a new day. So if you saw this Asian session playing out in a new day, you're expected to see it push up in here to capture this liquidity. Now from that liquidity grab here, you've seen it push down and break structure in here. Potentially on a smaller time frame, we're looking, if I go to a 1 minute time frame for argument's sake. Okay, this was the first little bit of structure in here, below here, that the market pushed down. So from in here, this is an area of interest that the market may want to come and retap when the New York session opens. But on a larger time frame, here was a swing structure that this candle, these candles in here, from in here, did the breaking. I'm interested in both of these areas. All right, let's go to 5 minute time frame. Let's see what happens. See if the market's going to kick back up into these levels before pushing down, or is the market want to continue pushing up? So we might see this market, because of, like I said to you, we was here making these higher highs, higher lows, but the market broke outside of our trend, capturing the liquidity, being all greedy. Is the market finished and wants to come back down back and jump back into trend, or is the market going to continue making higher highs, higher lows, higher highs? All right, this is the question we need to ask ourselves. But we don't need to be necessarily correct for the whole, what's going to happen for the whole week. We just want to know, is there an opportunity for us to get into the trade right now? Let's have a look. Is this market going to come back up into these levels and then push down and capture the liquidity below here, or is it going to capture the liquidity first? And when it captures the liquidity first, then what we're doing, looking for it to push back up. This is what I'm saying. This is how we're trading what we see. Let's have a look, see what happens. Okay, so we see the market came up here. We did have a reaction here to this level. Boom. Came back down and didn't take the liquidity. That's how liquidity still exists. It decided no, it wanted to push back up in here. Saw a little reaction here, but took the liquidity above this level properly. Let's see what's going to happen next. It's London session. Wait, let's get to New York. New York is coming right. Oh, that area of interest that we just wicked into. Okay, right just before New York's going to be kicking off any minute now. Let's see what happens. We are into those levels. So this market has, remember, here was structure, indication, correction, continuation. It's pushed up into level, but I was concerned because it didn't quite continue here. We didn't quite get a closure. Look, it's all wickage. I was concerned that we've broken outside of this trend line. And now the market's come back down here. And ultimately, this market is kind of going sideways at this point in time. Kind of trading in here at this point in time. Okay. Let's close up. Kind of trading in this little range at the moment in time. So now let's look at where we would be. This is London session. We might have looked at London session. We may have been able to get involved in this trade as the market looked. London session. Let's go back here because it was easy in hindsight. The trick is to be able to get involved when these things are happening. All right. So this is London session. We saw from here the market had a push down at the top of this session here. This is all still London. All right. Push down. Push down. Market came back into a little level, continue pushing down. We're sitting here watching it. New York started. At this New York session, we've seen this market break below London low, take Asian session liquidity, and then push back into the area of where this, if I go to my 15-minute time frame or 5-minute time frame, yeah, this push emanated, started from here. The market pushed right back into a little gap imbalance in here, and had a reaction in New York session, pushing bearishly. And that bearish reaction from that little imbalance, you see it there? A little gap in here, all right? The market pushed down bearishly and started to break structure. But more importantly, we're looking at where the market may be going. What liquidity, where can we see strength and speed? Where there was strength and speed that occurred from here, but the market reacted to that, came and tapped into that candle. Okay, so that's been mitigated, as in that's been dealt with. Then the market's coming back down into previous New York levels, okay? And, you know, we can see previous liquidity on London session, so previous London levels, and previous liquidity below London, and then Asian session. Is this market now, from making these higher highs, going to decide that it wants to come and start pushing down? Didn't break the structure here, so ultimately is this market being up in a premium, Over here, lower low, lower high, lower low, lower high. Are we going to start pushing back down into these levels? Possibly. Let's play this forward. And I'm saying, if you're doing this and you're actually saying, I'm going to take this trade, I'm hitting the button for a trade, yeah, then you can count. So have a look here. Asian session, framing the session. London started here. We saw the market push outside of this session for London, taking the liquidity below. In New York session, when it comes up, are we going to see an opportunity for this market to be bullish? And you can keep taking tabs. There's New York over here. Well, we've seen New York pushing and capturing liquidity here, capturing liquidity below here. Are we within this our area here, our session? Have we seen any reason, indication, correction, continuation to be able to determine and say that this market is going to be trading within that session in a particular direction? So all I'm trying to show you guys, not very well, I'm sure we've seen a couple of them, but to be able to understand that the market trades towards liquidity. You've got to match up liquidity with, have a look, our higher time frame narrative. You understand what I'm saying? That this market and may be trading bullish or bearishly, but towards liquidity. So this allows you to take very small trades on a smaller time frames. If I was to look, for example, look at this energy here. If I was to drop down 5 minute, just drop down to let's say go all the way to our 1 minute time frame. And we're looking here that this market is liquidity has just broken outside. For example, liquidity has just broken Asian session over here. It's broken over here. Let's go to a 5 minute time frame, make it easier. In London session, this push broke and took the liquidity of Asian session. We would be, if we were interested in a sell, we'd be interested when this market comes and taps back into this area that took the liquidity from below here. And we don't just hit our button, we're still going to be using indication, correction, and continuation. Yeah. In this instance, the market did tap into there. Wasn't as deep as we wanted it, but we don't know. There's other factors. Remember, there's news, there's other things going on that may have not made that so compelling. So we've seen the market come and push up into these levels. Do we get our indication, correction, and continuation? But on a smaller time frame, we get an indication or coming here, we get a correction, we get a continuation. You may have been in the trade here, but the only problem I'm having is it's outside of our kill zone. Yeah, and I really want us to be able to just only be restricting our trading within this kill zone here and within this New York kill zone over here. Yeah, for example, have a look at it here. This market was pushing up within the New York session. This big push broke structure here. We're interested in the candles, the area that broke past this level. All right, so if I get out a 1 minute time frame, go to a 5 minute for argument's sake. I'm interested in the candle that pushed past, boom, and broke this minor structure, which is this candle. Okay, let's have a look. The candle's created some imbalance. The candle's created some issues in here. We are in New York session on a smaller time frame. In New York session, this push into this area may have been a point of interest. All right, where the market pushed into. We've seen it come to the bottom of New York, dance around in New York session. And again, this might be a day whereby you turn around and say, look, I don't like the market structure, I don't get in. I'm trying to just say that it has to be restrictive. Our trading previously is not necessarily, we're just trading any session that we want to trade, anytime we want to trade. But if we start to restrict the time that we're trading to only when we see a good setup, something that we understand. For example, here we're in the next day now. This is Thursday. We're seeing Asian session, potentially, maybe is it framing a move? Okay, we've seen that we've seen in Asian session, the market didn't just indicate, correct, and continue, and after taking liquidity, it indicate, corrected, and continue bullishly. So that's the energy going into London. Okay, that is the energy that's going into London session. Okay, London session, we've seen it come and push all the way up, take previous liquidity of New York over here. Just go and keep pushing forward. Let's go and see when New York starts here. New York starts over here, pushed all the way up in taking this liquidity, tapping into imbalance. When New York starts, is there an opportunity for us to see with the higher time frame narrative, lower lows, lower highs? Is there indication, correction, continuation within that area for us to get involved in? Well, yeah, because the market pushed up in here, market pushed down, broke, just about broke structure, corrected, continued. You could have got into this trade within our New York block for a sell if that is our higher time frame narrative, and we can understand that we're trying to target some of this lower structure. All right, because the market trades from, especially when it's if you understand which direction it's going in. We're trading from here, trading to structure. When it pushes up here, we're trading to structure. When it pushes up here, we should be trading back to, if I change the colors of those, structure. Because the market is bearish unless it decides to change its mind, and therefore it changes its mind and you take a L. Okay? But anyway, guys, good morning. God bless. All right.
Just a quick question.
Let's go.
How do you get that indicator?
All right. So this indicator is over here. It's called indicator. It's called, you can find it in here, but it's called ICT kill zones. Have a look. ICT kill zones and pivots. You want to make sure that you don't need 300 going back. All right. Maybe 3 or 4 sessions that the market is showing you this information, but it's just the sessions, and it's showing you a key area. Now look, everything I'm showing you is within, it still has a level of like leeway. It's a key kill zone, but either side close to these kill zones is cool. It's just showing you that it's not for the whole session that you necessarily need to be in the markets. That's why you see a couple times things happen just before the session, or things happen into the session. But those are those key areas where there's lots of volume, where the markets are going to start to move. Okay, now look, there's still other factors. There's still news events. There was still the fact that all strategies are not 10 out of 10. A few times we didn't see it play out, and I was reading it a bit too close. So like I said to you, what I'm showing you is exactly the same strategy, whereby we're going to be marking up our structure, understanding what's happening in the markets, understand whether we're bullish or bearish, understanding premium and discount. But then the sessions is something else, whereby I've shown you a play that on a very small time frame, the market, if we see the market set up beforehand with strength and speed that breaks the structure, after grabbing liquidity, you can expect the market to go back to that imbalance before moving down in the same direction. That is still, it has to be in line with the smaller time frame structure. And that's a smaller move, but that small move could grab you huge risk to reward if you understand and you can see it play out quite clean, which we saw it play out a couple times quite clean. And just say this, even though I was going through and we saw a couple times we may have made a mistake, even if I was actually taking those trades. If we're managing our risk and making sure we're only risking 1, yeah, then that 1 to 10 trade makes us profitable. The one that we saw tapped in makes us profitable. And that's what it's about. It's not about every single time we go and look at something. Like when you backtest, and maybe GBP, GU at the moment in this kind of area where it's been dancing around isn't the best example. But when you backtest, it's not the case that every time you see it, if you don't see it happen, you go, oh, this is nonsense. You have to do it at least 10 times. And then work out that if you took those trades, risking one, breaking even, making sure you put your thing to a 1-to-1, breaking even when you get to 1-to-2 kind of level, breaking even, moving your stop loss. You can even take partials. So when you get to making a 1-to-3, when you get to actually your 3 times in profit, to take some partials, which means that if you're in a 10 lot, you modify it to a 5 lot. That means you took 50% partials, or you move your stop to take the money. You have to plot it out to see how, if you did that, would you be profitable or not? If you would be profitable, then you repeat it. It's that simple. If you'd be profitable, you repeat it. You're like, rah, bro, I'm not gonna lie to you. I thought I wasn't doing too well. I took 6 losses, but the 4 wins actually made me 3% up on my account, or 4% up on my account, or 5% up on my account. Well, then that's a profitable strategy that takes losses, because all strategies have a win ratio less than 100. Most strategies have win ratios around 50%, 60%. Maybe you might be able to get it up to, up a little bit. But that means you're gonna take losses, and nobody knows how those losses come. They might come loss, and then you start winning. They might come loss, then win, then loss, then win. So it's all about understanding that edge. Like I said to you, everything I show you is about framing this narrative. The market is bullish. The market is, let's go and look right now and see what's happening real quick before you finish. We'll definitely run on. substantially on a Monday, but it's my fault. I started late. All right. So if let's look on the larger time frame and have a look at our GU of what's going on right now, this minute, and what opportunities there are this minute to look in this market. And we're only looking at GU. Now, the only thing I haven't shown you GUs, you can also use EU as a reference for GU. So if sometimes GU is looking a bit mad and you can't tell what's going on, you can use EU. Yeah, because they're so closely related, they kind of move together. All right. And sometimes one moves before another. Now let's have a look here. So we can see that I'm looking at this on a larger time frame, on a 4-hour time frame. You can see the market has been making from down where the daily structure was. We saw the market's been making higher highs, higher lows, higher highs, higher lows. Is the market going to make a higher high? There is definitely liquidity sitting above here. Is this market trying to make a higher high on the bigger picture? Meaning that the path looks like this. Boom, boom, boom. Is this market trying to make a higher high? Even if it just wicks up here and then starts turning around, is it? Well, I don't know. Okay. What I do know is that the market came up all the way up to here and started breaking some minor structure on a 4-hour time frame, which is not minor structure, it's quite big for us as day traders. But the market came all the way up in here. It's not letting me rewind it for some reason. Let me move it. Why is it doing that? Who knows? All right, and the market pushed down here, broke structure, breaking some structure, then it came back up into these levels. So we know that this market here is kind of trading within this bigger range here and here, okay? And we also know that the market, came down here, went sideways, grabbed a little liquidity, pushed down, came back up here for some reason, making a higher low, and we're back into these levels. So the question is, we're getting into a premium of this blue box, and we're not only getting into a premium of this blue box, okay, is that we're getting into this potential premium level over here. On a smaller time frame, for us to draw some lines, I'll draw some lines like so. Okay, this is just me drawing some lines very quickly because I'm quite far out. I want to wrap up the session now. Phone's starting to ring Monday morning. All right, let's go here. We can see the market trading up within this range. Okay, let me scoot in some more. You can see the market trading up within that right range that I've just drawn. Okay, and we're in a premium of that white range also that we saw the market, have a look, create these New York highs over here. There's definitely liquidity sitting above this level in here. We saw the market push down in Asian session. We saw the market push out of Asian session. If I zoomed in here to that Asian session range, we saw that the market pushed out this Asian session range and we pushed straight down as soon as London started to go and tapped in here, broke structure of this push down here on a smaller time frame, indicating, correcting and continuing, and throughout all of London so far this morning, the market has been bullish, pushing up towards where? Well, let's just always think to ourselves that the market's pushing towards liquidity, which is that white line. The market ultimately has pushed up into that liquidity at the moment. If I was to really draw it where it's supposed to go, about here, yeah, and kind of made equal highs. Look, remember it's Monday. It's kind of made some equal highs in here, which is another concern because it's left more liquidity. So I'll be watching this right now, thinking to myself, boy, is this now a pull? Is this market going to dance around here and I'm going to see New York push up in here and then come down? Or are we going to grab this liquidity first and then start pushing down in New York? The London session's already played out. All right, and down here, there's liquidity below this London low, and obviously the Asian session low also. So if I see some market breaking some structure in here in a premium over here, after grabbing that liquidity, even if it wants to keep pushing up, it may push down first. And based upon if I see some strength and speed, if I see some imbalances, I may be able to get a very small entry, and that push down just to this structure only. Forget about even breaking through there and grabbing the liquidity. Just to this structure only could be a big trade, 1 to 6, 1 to 7, 1 to 8. All right. So what I'd say is, like I said, right now this market is moving through London session. Okay, it's definitely pushed up into this level. I think that it will capture this liquidity even more. It's created these equal heights. I think it will push up in here to some sort of this definition. And when it does do that, I'm going to be understanding that I'm in a real premium of this little push here, and I might see some sort of retracement, or even this market Monday. We might see. Remember, it's my guy speaking today. Look, my guy's speaking today at 5:30. So don't get it twisted that this market can't decide that it just wants to do this for a little while, whilst they hear him speak, whilst he says something. All right? Maybe capturing that Asian session liquidity, then deciding, you know what, he said something bullish for the pair. Then that would have come back down into this discounted area. You see? So this is the narrative, taking into consideration fundamentals, taking into consideration our market structure, taking into consideration how we know the market likes to trade towards liquidity. This energy coming down here would be it trading towards liquidity until it decides, you know what, nam. And even if it does it, it might eat it and still dance around whilst this news is happening. All right. So that's where we're at. It's Monday, guys. Try and make sure that you're in a position to take some trades. Do not overwhelm yourself. Indication, correction, continuation, market structure, premium or discount, but then start adding some other layers, which today is going to be sessions. What can I see happening in this session? What can I see? And you can do that across the board with other markets as well, because it's the same thing. The different sessions, which are going to be the same across all markets, Asia and London, whatever it may be, different pairs react differently in them. Different pairs have different energy in them, and you can turn around and say, is the Asian session, for argument's sake, look at this, is this Asian session here or a previous Asian session framing a move that's going to happen in London or New York? Why is it going to happen in London and New York? Because normally that's where the volume is, and that's where people start going, oh yeah, boom, we want to do that move. If it hasn't happened already, if the boat hasn't started traveling away already, how can you go and look through that and test that? Is you can back test. Now you don't have to take my word for it, you just back test and say, you know what, let me check what Jay's saying and see whether I can see it. Because you're not going to be able to see it in real time. Well, you are, but you're only going to be able to see it once in real time. You're not be able to get lots of data. But when you back test, you have to put 300 different indicators in here right now, going backwards. I can say, you know what? Let's see. Let me try it. Let me look for it 10 times. Let's see this market. Let's do what we do in a session, understanding the direction of the market. Have a look. That the market is going to be bullish. Like this. Let's imagine that the market was, let me rewind it, that we was in here, for argument's sake. Just let me do all my thing, understanding they're in premium, discount, understanding what I'm looking for, blah, 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 blah. But then let me drop my time frame down, and do it some more. And let me take into consideration this session thing that Jace keeps talking about. All right, because we've seen the market trading within a little range in here. All right, and let's imagine that we was, coming down into these levels. You can hit your play button. Okay. Or let's go into a smaller time frame. Sorry. We're looking at this on a smaller time frame. When this is a 4-hour, I'm saying smaller. It's not that small. 4 hours, we've seen energy like that. We can drop all the way down to a 15-minute time frame. All right, now we can start seeing these sessions. All right, so we're looking at it, thinking to ourselves, let's imagine that it was the 5th, Friday the 5th, okay? And we're looking here at this session, and the Asian session is framing some sort of energy, and we're looking at it, and we can see in London session how the market comes and captures that liquidity. Is there an opportunity for me in regards to how I understand to get into trades, whether that's on a 5-minute time frame, or, and I'm going to show you another thing again, what we were just looking at, the market comes up here and captures liquidity. All right. Now, on a 5-minute time frame, difficult to see. Let me drop down to my 1 minute. We can see here there was a point where the market was making higher highs, higher lows. And if I was to draw a line in, the angle's looking like this, without being able to see all the way down. The angle's looking like this. The market goes sideways. All right. We saw the market push out of here. And in that push out of here, the market left this imbalance in here. That was the candle here that broke some of this very minor structure. Okay. The market, you can see, comes back to that area, taps in, and then continues to break some structure. All right. That is on a smaller time frame to show you guys, but it happens on all time frames. Yeah. If you want to see, obviously, here's a bit, looking at it on the 5 minute, it's a bit difficult to see the structure, hence the reason why I dropped my time frame down. Because really here on the 5 minute, it's looking more like structures here, and that's not very strong structure. Structures here, more of a swing structure, stronger here. But we can see how that market pushed with strength and speed, and the market comes back and visits it, and then there's an indication, correction, continuation opportunity to get down to previous structure or below. Okay. Now we've seen this market here. That's happened in London. Potential push down from capturing the liquidity, but that doesn't mean that this is push down is going to go all the way down here. Doesn't mean that, because the market potentially, look at this line here, it's potentially in a discount, meaning it's potentially bullish. It's potentially wanting to make higher highs and higher lows. So if this was the low, this was a higher high, this is a higher low, potentially wants to make higher highs. See? So that's how the bigger time frame narrative rules, but the smaller time frame narrative can allow you to still take trades and be profitable, especially if they land within these key time frames, or at least around these key time frames. Let's play it forward before I finish off. I'm going to have a look at when New York kicks in. All right. See how that market's pushed down from there, doing great things, pushed into an area here. Now look, it's come back into an area where this previous structure was in here. Previous structure was here. It's come back into that area here. Is there an opportunity, and potentially this market's going to turn around for the buyer and start pushing up in here? Sorry. Yeah. So let's have a look over here on a smaller time frame. Let's have a look and let's see whether or not it's going to be New York's opening. So New York's just opened. Have a look. This is this one that we're looking at. New York's just opened here. We've seen the market push down into these levels within London session. Let's see whether the market's going to give us any reason to get involved. Still pushing down. Still pushing down. You can see liquidity down here. Okay. But in line with the trend, we've seen indication, breaking previous structure, correction, continuation. All right. Within our kill zone area that we're interested in taking trades. Yeah. And have a look once again. We've seen strength and speed that broke this structure. Strength and speed. So this candle, because this is one candle, if I go to a larger time frame, this whole area is an area of interest as that market broke with strength and speed. When that market taps back into that area, yeah, this is a point of interest whereby you could have said, you know what, I'm ready to execute my trade if you had a limit order, or you could be turning around saying, I'm waiting for an indication, correction, continuation. Could be. All right. You see that market push up to, but when you take that trade, in this instance, not fantastic. You have to understand that your targets, when you're going small, you're going to be looking at structure for targets. No, lovely. Took that target, it broke that high, tapped into some previous. Let's have a look. Now we're looking up here. This is where this liquidity is sitting over here. There is still liquidity over these highs, and this is a definite area of interest where the market was strength and speed from a previous area here. I'm definitely interested in here when the market broke through here. Okay. Yeah. I'm also interested in here where the market broke larger time frame structure underneath here. I'm interested in all of these areas. All right. Play it forward, so then we'll finish up. Market has a reaction from that area back into this area where it's just broken this structure. This is a battlefield. Remember we used to talk about our battlefields? This was a previous battlefield here that the market broke through with strength and speed, came back down here. So the market is going to look for liquidity. That's how it keeps moving. Yeah? This is what I'm trying to show. All right? See what happens. Going sideways at the moment. Asian sessions has kicked in, so we're in Asia, framing what may be happening. In London sessions here now, we've seen a little bit of a grab here. They're going to grab and tap into this. Well, remember, this whole area is of interest because that is an area where previously there was strength and speed, breaking structure. Okay, are we going to see a liquidity grab up here and the market come back looking for some more liquidity? Let's see. Let us see. Anytime you feel like it, let's go into that area of interest. Push past that. It pushed past this area. Look, have a look. It's pushed past this area of where that energy came from. It is. So if it pushed past that area, well then we're now, so you can get rid of this, looking at maybe it wants to go and grab some more of this liquidity. New York highs, previously unmitigated. All right, so let's go and have a look. So that's this little level in here within New York session. All right, so if we was getting in there, we're looking at way in there for the buy. Is that market going to push up and capture that liquidity? Because the market loves liquidity. It's delicious, yeah? There you go. Now, when it takes that liquidity, in our mind, we're thinking to ourselves, okay, what, is it going to push in the opposite direction now after getting its juice? Well, look, another session's just rolled in. We're in Asian session. Is that Asian session going to frame a potential range? Look, is it going to frame a potential range? Here was London. London's just started in here, okay? And London normally is the fake move, all right? So we've seen it come up in here, seen an ever so slight wick above on a smaller time frame. Maybe there was an entry. The market's pushed down, didn't break this structure, which is interesting, but it broke this structure. So that push after the liquidity grab broke this structure and then came back to the area of interest of where there was an imbalance. Made another wick, pushing down to see if we're going to break this low here. Let's see. Yes, from up here, broke this low. Okay, and if it broke this low, maybe the market's going to be bearish within this session. Bearish, maybe going all the way down to try and capture these New York lows once again. Let's see. No. After capturing this Asian session here, liquidity. Okay, so we always have to keep looking. Grab this liquidity here. So it's, we're still on point. Grab this liquidity here, run down. When it grabbed this liquidity here, it's now energies about the opposite directions. It's got fuel to continue going in this opposite direction. Yeah, came up here. This is within the same session. So this isn't the liquidity from a previous session. This is within the same session. So me saying it's going to grab this liquidity is a mistake. All right. We've seen it continue to push up. We want to grab a previous session's liquidity. We want to grab an enemy session, an opponent's liquidity. I want to be grabbing our own liquidity. All right. Let's go back here, see where that market could be running to. But we can see all the way over here, one of our previous sessions, even the liquidity all the way here. But before that happens, let's see what. Let me put a line there. So we know where it is. That's previous London session liquidity and some equal highs over there. All right, equal highs in that level. Is this market going to run it all the way up in there? All right, let's drop down to our 5-minute time frame. And it's quite fun doing this because you're in here making some predictions and testing out ideas without necessarily losing money. You're back testing. Yeah, you are back testing to see whether your ideas are correct or not. Have a look. This market from here melts straight through all of this structure upon New York opening. All right, boom, breaking structure on a 15-minute time frame. Big push, broke structure, grab liquidity of London, grab the previous liquidity of a previous New York session into here. Once again, this area here again becomes of interest. Yeah, because the market broke structure here. This is the candle that broke that structure in here. This energy in here is what broke that structure. We've got this imbalance above here. So I'm thinking to myself afterwards, whether it's going to be today or another day, is that market going to go back in there and close that imbalance? There we are, we're in that point of interest. But then we get into another session, which is Asian. This is another day to start. This is an Asian session again. We're watching it again as the market once again starts to frame the day. All right. You see the market pushing up here. Is it pushing up here to close up some of this imbalance, only to push back down? Or does the market want to go all the way up in here and close these imbalances in here? These are the questions that we continuously ask ourselves. Look, that same area of interest, which is this candle, that this market came, which is this candle that broke these previous structures here. This whole candle is a point of interest. Now on a smaller time frame, we may be able to see smaller structures that were broken first. Let's go to our 5 minute. Can you see here? This smaller structure was broken first. This candle around here, these areas here become of interest of the candles that pushed, of the candles that push through past that first bit of structure. They become of interest, okay? But if we was taking that trade, we have to take into consideration the whole imbalance. Our stops will be above the imbalance. And we can see how the market, this Asian session was framing it. London session came and grabbed the liquidity, nam, 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 nam. And when it was ready, look, right in that area that broke that previous bit of structure, we see in the market, whoa, wood up, and it starts again. Just grab liquidity, just made imbalance, blah, 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 blah. And we're framing it. But whilst we're sitting here waiting for this point of interest, if the market doesn't roll in there and a new session opens, we have to look at what this session is presenting to us. We can't just be like, oh yeah, it's coming all the way up here. Maybe not. Maybe not in this session because there's some fantastic liquidity below. This is what often messes us up, thinking, oh, I thought it was going to go up, then it went down. It went down. It's because you have got to be present with what it's presently doing. Yeah? Guys, good morning. Amazing day. I don't want to keep going because I'm getting into it. I'm going to be here all morning. All right. We're going to do some more on that. It wasn't as fluent as I wanted it to be. But you have to understand that no strategy is 10 out of 10. Markets move towards liquidity, but within the higher time frame, the bigger narrative. Okay, and when it takes one bit of liquidity, it's like playing, had in school, or you used to run and have to touch the wall, then you can run back. That's what happens. It runs, touches the wall, then runs back. It touches a smaller wall, and then runs further in that direction, touches that wall. That's how the markets move. So if you can understand where those places where they're going to be touching, because they're in high probability timeframes, i.e. when London, when New York opens, because they're framed by certain liquidity, then it allows you to take trades very quickly in and out the markets on your 5 minute or lower time frame. If you want to do it on a higher time frame, that's fine. It's the same principle. The same things apply. It's just more of a waiting game. It's more, okay, look, this market, boom, broke down here, indicated, came back into here, corrected into where are points of interest. Therefore, if I was taking this on a higher time frame, this whole area on a higher time frame is my entry from where we saw the imbalance all the way up to here. This all here is my entry zone on a higher time frame. On a lower time frame, when I zoom in, I start to see structures in here, and see this is the candle that did the damage and broke through. Okay, now I've automatically got a smaller zone. Yeah, maybe if I looked closer, I'd see a smaller structure again. Blah, 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 and that allows me to take a trade. And when I take this trade, where am I taking it to? Well, depending on which direction the market is going, which I can't remember at this point in time, you're trading towards your structure. If I zoom out and understand the market is bearish or bullish, well, at the moment, the market is bullish. So if the market being bullish, I'm not necessarily expecting it to go all the way down to the bottom. I'm expecting it to go to 50%, possibly of the impulse. Okay, I'm expecting to go to potentially 50% of the impulse. So if this is the impulse from here to here, I'm expecting to get down to here, but I'm not necessarily expecting to come and break this structure, because it's ultimately right now, if I really want to, it's ultimately making higher highs, higher lows. I'm expecting to see a higher high, which I have, and then a higher low. Yeah. So even if it melts through here, that's not what I'm expecting. So therefore, this is where I'm taking my profits, or I'm moving my stop loss, or whatever it may be. Yeah, and it's all about understanding the market and where we are and what you think it's going to be doing. But guys, amazing day. I'm going to put on some education, somebody interviewing a trader. It's for beginners trader. It's a beginners trading podcast. And the guy says, I made over 200K trading using a bank loan. All right, so let's go and see what he's got to say. And I'm going to wish you guys an absolutely fantastic day. For those of you watching online, like, subscribe, blah, blah.